What's up, stock investors? Mike the Investor, and in this video we're going to be discussing my thoughts on Disney suspending their dividend, and then after that, of course, we're going to be looking at the full portfolio to see how each individual holding has been performing. Now, if this is your first time hanging out on the channel and you like what you see and you like what you hear during this video, be sure to go ahead and smash that like button for me, and also be sure to go ahead and click that subscribe button as well, so that way you can be notified each time new content is put out. And at any time during this video, be sure to go ahead and check out the show notes in the description box. You'll find some useful tools in there and also some things I may have forgot to mention in this video. Now let's jump into it. Alright, welcome back to the channel, investors. Now we are on the Robinhood platform where we can see my portfolio value is $7,736.02. During market hours, I was up 0.93%, which is $71.34. And after hours, I was up 0.26%, which is $19.86. So on the day, I was up a little over 1%. Now, as we go over and look at the 1 week here, we can see I am down 1.08%, which is $84.15. We look at the 1 month, we can see I am up 5.81%, which is $424.71. And we look at the 3 month marker here, we can see I am down 15.02%, which is $1,367.23. And then for the 1 year here, I am down 8.03%, which is $675.73. And then for the all time here, you can see I'm down 7.91%, which is $664.54. So all time, I'm still down about 8%. But as you can see, if we go to my portfolio here, the most I was down altogether when we see that huge market downturn, you can see I'm down 26.80%. So my portfolio has seen a nice recovery. I do believe we're going to see another extreme market downturn in my opinion, and that's why I am still sitting on a few $100s in buying power, and then I am going to be adding some more money in here soon. I don't know if I'm going to invest it yet, but I will just have it kind of sitting on the sidelines. Now, before we dive into each individual holding, let's talk about Disney and them suspending their dividend. So we're going to go over to this article on Morningstar by Neil Macker. It says the board announced the semi-annual dividend for the first half would be suspended, saving the firm roughly $1.6 billion in capital based on the previous payment of 88 cents per share. Given that the firm had $14 billion in cash at the end of March with another $17 billion available via its credit facilities, we think the dividend suspension is less about preserving cash and more about the perception of paying a dividend while furloughing over 120,000 employees. We are maintaining our wide moat and our FVE of $130. And if you don't know what FVE is, that is just short term for fair value estimate. And I briefly want to read this second paragraph because it shows the power of Disney's moat. It shows how other categories in their business is still increasing year over year, bringing in capital back into the company. So as we can read here, it says the revenue increased 21% year over year to $18 billion. Media Networks revenue improved 28% due to the Fox consolidation. Affiliate fee revenue in the quarter was up 16%, which was made up of 12-point increase from the Fox asset and a 7-point gain from the higher pricing, with the 3-point decline from fewer subs, implying 4% growth in affiliate fee revenue excluding the Fox impact. So you can see the company is still increasing revenue year over year. Now also, this is something to keep in mind as well in the future. Unsurprisingly, management expects a large decline in ad revenue at ESPN next quarter given the lack of live sports, which we have to expect. Now, me personally, I do not believe that Disney has suspended their dividend due to the lack of poor company management or them not being able to pay the dividend as a whole. I think they're looking at the bigger picture, and I also think they are trying to keep as many employees as possible because it is a family-oriented company. Now, me personally, I am not going to be selling out of Disney. I know there are a lot of investors that sold out of Disney, but me personally, I'm going to be holding on to the shares that I have. Even with Disney suspending their dividend, the stock is still going higher than where it was a couple months ago. And this for me just kind of shows the belief and the power of Disney's brand as a whole. I still believe they have a huge upside potential, and Disney is pretty good at innovating themselves on making sure that they can withstand other things here in the future. Now, with them being in this type of sector, there is no way that they were not going to see some type of decline in their overall business, because they deal with the communication side, they deal with the resort side, they deal with travel. So those are main industries that got hit extremely hard due to the pandemic. So for me, those are some of the main reasons why I am still staying invested in Disney. Now, I know there may be some investors that disagree with maybe my thought process or maybe why I'm still invested in Disney, but I'm looking at the long term. I'm only 28 years old. I'm not looking to use any of my dividends until the next 20 plus years out. So I'm looking completely long term. I'm not looking to cash in. As you can see here, May 2019, you can see I started at $5.33, and now you can see just the last month, $20.52, with my biggest year was the last month of 2019. December, almost $25 in dividends. So I'm very close to receiving that first $200 in dividends. As you can see here, $176.05. So that is the power of dividends, and you reinvest every single month. Now, as you can see, I have the red color here because Apple Hospitality REIT is one of the 18 holdings that is not paying me right now because they have suspended their dividend as well. And now you can see I have Disney here because they are not paying a dividend anymore at this time because they have just suspended their dividend. But this tells me every single company that is paying me month by month. Now let's go ahead and dive into each individual holding. And the first position in the portfolio will be Procter Gamble. This is a consumer staple dividend king. This is a very safe play in my opinion, but I am no financial advisor. This is completely for entertainment and educational purposes, and hopefully you can learn from some of the mistakes that I share during my journey. So now you can see on my average cost is $110.29 on 3 shares. My total equity, $337.65. I am currently up 2.05% on Procter & Gamble. The next position in the portfolio would be 3M. They are in the industrial industry. This is also a dividend king, and they have been holding up quite well in this pandemic. And you can see for my average cost, $159.62 on 4 shares. We go over to my equity here, $581.60, and I'm down on this position 8.91%. The next position will be Johnson & Johnson. This is another dividend king in the healthcare industry. This is a solid company. This is actually one of my favorite holdings here in the portfolio that I'm waiting for another dip so I can add some more shares into this position. So we scroll on down here, and for my 4 shares, my average cost $139.71. As you can see for my equity here, $590.36, and my total return, I'm up on this position at 5.64%. After Johnson & Johnson, we move on down to Coca-Cola here, and this is a dividend king as well. For my position, I have 6 shares. My average cost, $52.15. As we look at the total equity, $268.80, and I'm down on this position at 14.09%. And my last dividend king in this portfolio will be Altria, and they are in the consumer staple sector dealing with the tobacco industry. So now as we scroll down to my position here, I have a total of 10 shares. My average cost $47.63. As we look at my total equity, $354.10, and I'm down on this position a little bit at 25.65%. Now we're going to move in a few of my dividend aristocrats, and a dividend aristocrat is a company who's grown their dividend for 25 years minimum and growing, and a dividend king is a company who's been growing their dividend for 50 years minimum and growing, and they are also a part of the S&P 500. So Archer Daniels and Midland, this is also in the consumer staple sector. They deal with the agricultural industry. For my average cost here, $39.02 on 4 shares. You can see for my total equity is just $139.04. And for my total return here, I am down 10.91%. The next position in the portfolio would be AT&T. This is a solid dividend aristocrat in my opinion, but they may be facing some tough times coming up ahead. As we scroll down here to my position, I have a total of 5 shares. My average cost is $31.25. As we move over to the total equity, $144.75, and for my total return, I'm down on this position at 7.37%. The next position in the portfolio would be Microsoft. Now this is the largest position in my portfolio and also one of my favorite positions as well in the portfolio. So as we go ahead and scroll on down here, I have a total of 5 shares and my average cost $171.87. As you can see for my total equity, $922.35, and I'm up on Microsoft at 7.33%, which gives me a total of $63 even. The next position in the portfolio will be Starbucks, and they have been around this $74 to $75 range, and now they're starting to move up to that $76 range after today. As you can see, they were up 4.76% just on today during market hours. So now as we go ahead and scroll on down to my position, I have a total of 10 shares. My average cost is $87.05. My total equity, $761.50, and I'm down on this position at 12.52%. Now some of you may be wondering, hey Mike, Starbucks is significantly lower than your average cost. I know it is, but I'm still waiting for another dip because I truly believe that we're going to see another dip here in the market, and that's when I will be ready to add a lot more into my core positions. The next position in the portfolio would be Disney, the company we just talked about not too long ago. You can see Disney is currently at $107, and now I'm just going to go and hit the 3-month mark here. And as you can see, if we go to March, they were at $82.33. So even for new investors that got in at this time, they are still up on their investment even with a dividend cut. So that really just shows the power of the brand of Disney and how strong the investors feel that Disney will overcome this turbulence that they're facing currently. So now we're going to go ahead and go on down to the position here. I have a total of 6 shares. My average cost, $117.68. We look at my total equity, $642, and then we look at the total return here. I am down 9.07%. Now you may be wondering as well, just like some of my other positions, Disney is significantly lower than my average cost. Now I do have my eye on some other positions, and I am going to wait to see what truly fully happens with Disney before I add a few more shares in, unless it drops considerably lower than where it is now. So after looking at Disney, the next position in the portfolio would be Pfizer. This is a large healthcare company, one of the largest in the world. We move on down to my position here, have a total of 10 shares. The average cost, $39.05. The total equity, $370.60. And I am down on this position at 5.09%. The next position in the portfolio will be the AES Corporation. This is a gas and a utility company here. We go ahead and scroll down. I have a total of 10 shares. My average cost, $16.05. My total equity is just $123.50. And as we look at my total return, I am down 23.05%. The next position in the portfolio would be Bank of America. This is the second largest bank in the United States. As we scroll on down here, and the financial sector has been hit extremely hard, and we may see a bigger dip here in the future. Now for my average cost, $28.57 on 10 shares. We move on over to the total equity, $230.60. And as we go down to the total return, you can see I am down 19.29%. After looking at Bank of America, we move on down to my REITs, which is also known as real estate investment trust companies. Now, these companies, you definitely want to be mindful, and please do your due diligence when investing in these companies, because I believe the real estate industry will get hit a little bit harder, which will allow us to invest at a better value price. So as we move on down here to the position here, you can see my total average cost, $72.14 on a total of 10 shares. We move over to my total equity, $544.10. And as we look at the total return, I'm down 24.58%. The next REIT in the portfolio would be STAG Industrial. Now this REIT has actually held up pretty well. So as we scroll on down here to my average cost, $29.89 on 10 shares, we move on over to my equity here, $254 even, and we move down to the average cost, and I'm down 15.01%. The next REIT in the portfolio will be IIPR, also known as Innovative Industrial Properties. This is a pretty good REIT in my opinion. It is a very new REIT. They've only been out for about 2 years now, but they also have grown that dividend each year that they have started paying it. So we will see what's going to happen with Innovative Industrial Properties, but with it being a newer REIT and with them being connected to the cannabis industry, I think they're holding up quite nicely with the turbulence here in the stock market. So we scroll on down to my position here. I have a total of 5 shares. The average cost, $74.49. You move over to my equity here, $380.20. As you can see from my total return, I am up 2.08%. And my last REIT in my portfolio will be Apple Hospitality REIT. Now they have suspended their dividend, as I mentioned earlier in the video. As you can see, they were up quite nicely, 4.20% during market hours. As we look at my position here, I have 50 shares. The average cost, $14.58. My total equity, $434 even, and I am down on this position quite a lot at 40.46%. And for the last position in my portfolio will be SPHD. This is the only ETF that I hold in this portfolio. PowerShares S&P 500, high dividend, low volatility ETF. We move down to the position. I have a total of 10 shares. My average cost, $42.87. We look at my total equity here, $312.80, and I'm down on this position at 27.04%. So these are all 18 holdings here in my portfolio. I have one ETF, and then the other 17 are individual stocks that I hold. And then you can see I still have the buying power that is sitting in here from my sale from Pet Med Express. Now I will be adding some more cash, and I will just probably have it sitting on the sideline because I'm waiting for another dip that I believe we will see here in the future. All right, investors, if you own Disney, be sure to let me know down in the comment section. Are you going to sell out of your position, or are you going to hold your position for the long term? I'm very curious to know what other investors are doing about their Disney position. And if you like what you saw and you like what you heard on this video, be sure to go ahead and like the video for me, and also share this video with a friend. It really helps out the channel, and it helps this video get to a broader audience. I'm Mike the Investor. Remember to stay inspired, stay motivated, invest in yourself, and I will see you guys back next time.